In this video, I'm going to take a look at the technical and fundamental analysis of the top 5 mining stocks. So let's get right into it. Here I asked ChatGPT what are the 5 largest mining companies in the world. You can see those here: BHP, Rio Tinto, Vale, Glencore, and Anglo American. Each company has their own strengths and weaknesses, but in my opinion, they all have a large moat, as some of them have been around for over 150 years and have quite a lot of resources as well as purchasing power to buy out other smaller mining companies. Here to take a quick look at the BHP technicals, I like to look at charts that are not so detailed to where you can just tell by one look whether this is an uptrend or a downtrend. Right here it's chopping around. You've got really a triangle pattern. Could be a double top. So as far as the technicals go, it's difficult to say whether this will break up or down. It's near where its highs were. So obviously none of this is investment advice. Use your own judgment on, and timing the market is really not a practice that can be reliably reproduced. But you're getting around a 6% dividend regardless, and you can always average down if that's your strategy. Looking at the fundamentals, so here NYSE, ticker BHP. Price to earnings around 11. Price to book, this is one of the higher of the bunch here of these top 5, close to 3. Current ratio 1.6, and debt to equity of around 40%. Jump right into Rio Tinto. These tend to trade together. They're the two largest. They both have large uranium reserves, and I think that is an underappreciated aspect of these companies, as some of the uranium smaller cap companies, pure play uranium companies, have had a massive run up, while these larger companies have some of the largest uranium deposits, in addition to copper, this type of thing, iron ore of course, and the action has been somewhat stable. Of course, it's had a large run up since 2016, and again, tricky pattern. It's hard to tell. Do you have a double bottom here, or is this a Wyckoff distribution? Regardless, you're getting a reasonable dividend here, and in theory, you're getting some level of inflation protection, although inflation does seem to be stalling, and really this is not by market forces. This is simply what is the Federal Reserve going to do, which is going to directly impact inflation. So here, looking at the fundamentals, Rio Tinto, New York Stock Exchange, RIO is the ticker. PE, again, trading very similar to BHP, around 11, a little bit lower. Price to book 2.25 rather than that 2.9. Current ratio about the same, close to 1.6, and a little lower debt. So out of the two, this has lower debt and a lower price to book. Rio Tinto is a very good company, and it is a company that I do hold in my personal investment portfolio. Looking at Vale, Vale has a similar pattern. Interesting, it's just a little less dramatic, so it went up less, and I think this may be trading more with the Brazilian ETF, which to me appears to be very cheap right now, with very, very high dividend yields and a currency that is stable against the dollar at this point. But here, similar, a little bit higher, 6% dividend. On the fundamental basis, New York Stock Exchange, ticker VALE. Here you're trading, again, discounted compared to the other two, a PE of about 5, price to book similar to Rio Tinto, a little bit lower, a little above 2. Current ratio above 1, And again, these are capital intensive companies with well managed debt, so debt to equity of 35%. Glencore. Now, Glencore has some controversy around its history. So for that aspect, I prefer to stay away from that personally. That's just my personal opinion, but look up the history. It's quite interesting if you're interested in something like that. Again, this thing is run up quite a bit. You're still getting a little under an 8% dividend. This one is over the counter. So GLCNF, that is an ADR. You're not getting the direct stock. PE around 7, price to book 1.7. You can see some of these other metrics. Feel free to pause or look these up yourself. I use the Wall Street Journal, and I always put the link below. Current ratio 1.29. Higher debt here, so so 58%. I would personally, the other three companies seem to be a better overall value because of that debt. Anglo American, also very interesting history here. In South Africa, they have quite a few mines. The De Beers diamond mines, Cecil Rhodes. Interesting history and a definite downtrend here. The way I like to look at this, I prefer to see this momentum slowing. I don't prefer to catch a falling knife, but again, none of this is investment advice. I'm just using ChatGPT, looking up a few different sectors and giving my personal opinion of how I think about these things. For entertainment only, and go ahead and obviously do your own research. So Anglo American, 4.85% dividend yield. So these all have good dividend yields. That's why I'm personally interested. This is again an ADR, so the ticker here is NGLOY. You're not going to get the stock direct on the NYSE. PE 16, price to book 1.7. Current ratio even higher, really the highest of all, but a little bit higher debt. So hopefully this was helpful to you. Leave a comment below. Let me know if you like any of these stocks and if there's anything else in your radar that I'm missing, and I would like to feature some of the suggestions. So I appreciate it. Take care, and I'll see you in the next one.